dear students. So today, before we take up the very first solution, I would like to bring to your notice what are the accounting treatments that are being dealt under this chapter, Dissolution of Partnership Firm. So the first account that we are going to prepare is realization account. Second, partners capital account. Third, cash or bank account. Realization account. In my previous video, I have very well explained to you on how to prepare this account. So a quick recap. The first step is to write the assets and liabilities in realization account in the book value. Secondly, you need to write realization of assets and payment of liabilities in realization account. Followed by, you need to check if there is any asset or liability taken over by partners. And finally, specify about the realization expenses which is either paid by the firm or partners. On preparing realization account, we will either get profit on realization or loss on realization, which is shared among the partners in the profit sharing ratio. The next account is partners capital account. Students, first and foremost, you need to bring down the capital of the partners as it is, followed by you need to check in the balance sheet if there is any reserves or profit and loss given in the balance sheet. The rest of the items you need to follow the realization account. By the end, you will either get the final balances of the partners or the deficiency of cash that the partner has to bring into the business before its closure. Preparation of cash or bank account. From the balance sheet, we will bring down the value of cash or bank in this account. Followed by, you need to go through the realization account and partners capital account to complete the procedure of cash or bank. To this very first solution under dissolution of partnership firm. Suvarna and Sunanda are partners sharing profits and losses equally. The balance sheet as on 31st March 2018 is given to us. On the above date, the firm was dissolved and the following information is available. A. The assets realized as follows. Debtors rupees 52,000, stock rupees 39,000, machinery rupees 24,000, buildings rupees 75,000 and furniture rupees 13,000. Point number B. Creditors and bills payable were paid at 5% discount. Point number C. Dissolution expenses amounted to rupees 4,000. Prepare realization account, partners capital accounts and bank account. Students, from the question we understand that on the above date the firm was dissolved. The partners of the partnership firm are Suvarna and Sunanda. The profit sharing ratio is equal, nothing but 1:1 or written as 1/2:1/2. In order to prepare realization account, partners capital account and bank account, we need to follow the balance sheet and the adjustments given in the question. In order to close the books of the partnership, let's follow the balance sheet that has been provided to us. We have creditors, bills payable, Sunanda's loan, reserve fund and capital given on the liability side of the balance sheet. Remember students, Sunanda is the partner. So Sunanda's loan will go to bank account, while reserve and capitals will reflect in partners capital account. So the other liabilities are nothing but creditors and bills payable. On the asset side of the balance sheet, we have cash at bank, debtors, stock, furniture, machinery, building and profit and loss account. Cash at bank will go to bank account Debtors, stock, furniture, machinery, building. These are the other assets of the business. Whereas profit and loss account will reflect in partners' capital account. If you follow the adjustment, they have given us assets that are being realized. They have already given us the realized value. For example, if you see the debtor's value that is realized is as it is, that is 52,000, whereas stock is being realized at 39,000. So that means the value of stock is actually reduced. So let us not worry about what is the reduced value. Let us focus on what is the realized value, or at the what value the asset is being sold. Likewise, machinery value is 25,000, but the realized value is 24,000. Buildings value is 81,000, but the realized value is 75,000. Furniture value being 15,000, but it is now realized at rupees 13,000. So realized value or assets realize nothing but the assets which are being sold. Further, point number B, creditors and bills payable were paid at 5% discount. So that means, what do we understand from the question? Liability is nothing but is the obligation of the business to pay. Now when you are making payment, you need to show 5% discount. So what is happening? Your liability is actually reduced. Remember, whenever you get the term discount in your question, you have to straight away reduce the value. Dissolution expenses amounted to rupees 4,000, nothing but the realization expenses which is paid by the firm. The question is silent, student. We need to understand that it is being paid by the firm. So therefore it will reflect in realization account and as well as in bank. Let's prepare realization account. Remember the rule, on debit side we record all expenses and losses, on credit side all incomes and gains. So from the question, students, we understand that the firm is being dissolved, for which we need to prepare realization account. And in my previous video, I have explained you the format of realization account. So first and foremost, we need to write the values of assets and liabilities in their book value. Let's follow the balance sheet. I will begin from the liabilities side. The first item being bills payable 10,000. So write it as by bills payable 10,000. The second item is creditors. Value is 50,000. Write both the amounts in the outer column. Sunanda's loan. Sunanda is a partner, so do not write it in realization account. It has to go to bank account. Followed by capital and reserve fund. These two will reflect in partner's capital account. Let's begin from the asset side now. The first item is cash at bank, which will go to bank account, followed by debtors. In debtors, we have debtors value reduced with provision for bad debts. We need to close both the accounts. So therefore, first on the debit side, write it as to debtors account 55,000. On the credit side, write it as by provision for bad debts rupees 3,000. Next, we have stock. Let's write the stock value as it is. Furniture value is 15,000. Machinery 25,000. Buildings 81,000. The last item being profit and loss account, we will post this in partners capital account. So I have finished step number 1 of realization account. What is step number 2? To identify what are the assets and liabilities which are being realized and paid off. So point number A speaks about assets being realized. Remember students, realized means the assets are being sold in order to make the payments of the business, because we are doing the closure of partnership firm. So therefore you will write it on the credit side as by bank account. In bracket, for you to understand, I will write it as assets realized. Either the assets will be realized or assets should be taken over. So make sure that from the balance sheet all the assets are either realized or being taken over by the partners. So the first asset given in the question is debtors. So write it as debtors, amount being rupees 52,000. Stock value is 39,000. Machinery 24,000. Buildings 75,000. Furniture 13,000. So if you follow the question, all the assets are realized. So let's do the total of all the assets that are being realized. We will get a value of 2,03,000. Now let's follow point number B. Creditors and bills payable were paid at 5% discount. These are the two liabilities of the business which is being paid off. So therefore write it as to bank account. In bracket, liabilities paid. What's the first liability? As per the question, it is bills payable. The value of bills payable is 10,000 minus the discount value is 5%. So what you can do is, students, in your calculator type 10,000 minus symbol 5%. You will have the answer as 9,500. That's a direct way to work out the solutions. It will be very easy for you as well. The next one is creditors. Value is 50,000. So 50,000 minus 5% discount. Whenever there is discount, make sure that you are going to reduce. So on your calculators type 50,000, use the minus symbol, type 5, use the percentage symbol, you will get the answer as 47,500. These are the only two liabilities. Let's close. You will get a value of 57,000. So that's it with step number 2. Step number 3 is we need to check whether we have any asset or liability that is being taken over. Nothing mentioned in the question. So what's step number 4? To check whether there is realization expenses. Yes. Point number C, dissolution expenses amounted to rupees 4,000. So how do you write it? It is through bank account to bank account, in bracket, realization expenses amounted to rupees 4,000. Write it in the outer column. So that's it with realization account. Now we need to do the balance. If you add the amounts of the outer column, you will get 2,77,000. Likewise, on the credit side, if you add the amounts on the outer column, you will get 2,66,000. So let's write the highest amount on both the sides. 2,77,000 minus 2,66,000, we are going to get realization loss rupees 11,000. Distribute this, between Suvarna and Sunanda in their profit sharing ratio. So by partners capital account, the first partner is Suvarna. Her profit sharing ratio is 1/2 into 11,000, 5,500. The next partner is Sunanda. Her profit sharing ratio is 1/2 into 11,000. You will get 5,500. So if you add both the amounts, you will get 11,000 as loss on realization. Now there are few things that you need to make a note of it. First and foremost, we have bank account. We have got 2,03,000. Post this information when you're preparing bank account on the debit side. Next, on the debit side of realization account, you have written to bank account and you have arrived at 57,000. When you're preparing bank account, show this amount on the credit side. The next information, again you have bank account, realization expenses, show this on the credit side of bank account. Followed by, when you're preparing partners capital account, make sure to show the realization losses of the partners. Preparation of partners capital account, the rule is debit the receiver, credit the giver. So first and foremost, let's bring down the capital of the partners given in the balance sheet, which will be written as by balance brought down. Suvarna's capital amount is 60,000. Sunanda's capital amount is 80,000. The next information given in the question is about reserve fund. So let's distribute reserve fund among the partners. The value of reserve fund is 15,000. This need to be shared in their profit sharing ratio, which is 1:1. So 15,000 into 1 divided by 2, we will get rupees 7,500 for both the partners. The next information given in the question on the asset side is profit and loss account. So let's write this and distribute among the partners as profit and loss account. The value of loss given in the balance sheet is rupees 12,000. Let's distribute this in the profit sharing ratio. So both the partners, we will write rupees 6,000. Now from realization account, we have realization loss, which is recorded on the credit side, now posted on the debit side of partners capital account as to realization account in bracket loss. We have already calculated. Let's write the amount as 5,500 for both the partners. So that's it with the postings in partners capital account. Let's do the balancing. Begin with the first partner is Suvarna. Her debit side total will be 11,500, whereas credit side total will be 67,500. Let's write the highest amount on both the sides, 67,500 minus 11,500, we will get 56,000. This is the final settlement, so therefore write it as to bank account in bracket balance in figure paid. The next partner is Sunanda. Her debit side total is 11,500. Her credit side total is 87,500. Let's write the highest amount on both the sides. 87,500 minus 11,500. Her final settlement value is 76,000. This is the final settlement, students, so do not bring down any balance. You need to remember over here we have bank account. So therefore this information will reflect in bank account on the credit side. Preparation of bank account. The rule is debit the receiver, credit the giver. In order to prepare bank account, first and foremost we need to bring down the balance which is given in the question. So on the debit side, write it as to balance brought down. Amount is rupees 15,000. This information is there in the balance sheet on the asset side as cash at bank. Now let's follow realization account and look into those items wherever we have written bank account. So on the debit side, first and foremost we have bank account for liabilities that is being paid. So let's write this information on the credit side as by realization account in bracket liabilities paid, and the final amount that we have calculated is 57,000. Then we have realization expenses which is posted in bank account. So write it as realization account, nothing but the realization expenses amount rupees 4,000. So that's it with the debit side of realization account. Now look into the credit side of realization account. We have assets realized written as. So write it as to realization account in bracket assets realized. The final value that we have calculated is 2,03,000. So that's it in realization. Information is with respect to partners capital account. For that, in the question we have Sunanda's loan account. Remember students, we need to write this information in the bank account. So let us write it as by Sunanda's loan. The amount is rupees 25,000. Now let's follow the partners capital account. Over here we have the final balance which is written in the debit side of partners capital account. Let's bring down that information in the bank account on the credit side. We will write it as by Suvarna's capital account. Amount is rupees 56,000. The next partner is Sunanda. Capital account. Amount rupees 76,000. Now students, if you remember while explaining the format, I had said your cash or bank account is going to be equal. When you're going to do the total, that's on the debit side. If you add the amount, you're going to get 2,18,000. Likewise, on the credit side, if you add the amount, you're going to get 2,18,000. So this is how your bank account is going to tally. With this students, do not forget to watch the previous videos which is equally important to understand the solutions under dissolution of partnership.